Good afternoon, everyone. I'm Greg Ulmer with Key Performance Ideas, and I would like to welcome you to our webinar on Capital Asset Planning in Oracle Enterprise Planning and Budgeting Cloud Service. Today's webinar will be presented by Ali Khaled. Ali is an analyst at Key Performance Ideas and plays an active role in the design and development of customized Oracle Hyperion Planning and Budgeting Cloud Service solutions. As a certified Oracle Hyperion Planning and Budgeting consultant and CFA Level 2 candidate, he helps guide clients in their implementation of successful planning, budgeting, and reporting solutions. Ali, welcome and thank you for joining us today.
Thank you, Greg. And once again, thank you for all attending and giving me this opportunity to present to you. The purpose of this presentation is to really give you a better understanding of capital planning, as well as to give you a brief intro into EPBCS. But before I start my demo, I also want to give you a brief explanation as to how capital planning fits into EPBCS. So as many of you may already know, capital planning is the process of scheduling and optimizing the retirement of existing assets, as well as the purchase of new ones. And it comes as one of the 4 new modules with EBD CS, along with the 4 others you see here: financials and strategic modeling, workforce, and projects. The focus of EPBCS is really to give the power back to the end user through out-of-the-box functionality. And this is done by creating a module that's flexible enough to really accommodate almost any business needs without really compromising that core functionality. So as you can imagine, capital planning is a process that grows in both importance and complexity with the size of an organization. So if we look at a multinational corporation, we can imagine that as the number of assets grow and as it begins to operate in various regulatory jurisdictions, the number of transactions will also increase along with the accounting and tax attributes. This will ultimately lead to more confusion and finally lead to more error. And when this is coupled with the spreadsheet nightmare, which is the grueling process of trying to maintain up-to-date error-free report filing system, we begin to understand why studies show that spreadsheets with more than 150 rows tend to have significant error, and why it's not uncommon for companies to overpay on tax and insurance by 10 to 20% due to what's referred to as ghost assets, or assets that no longer physically exist but still exist on paper due to poor accounting practices or lack of proper oversight or otherwise. But this essentially boils down to human error, which is leading to false inputs and finally false assessments of the true value of these assets, and thus we have overtaxation and higher insurance premiums. This really brings up the question of whether or not we have the same amount of time we would like to have in order to do the level of analysis we would like to do and optimize our decision making to really make the best decisions for our business. And this is where capital planning really begins to shine. Capital planning saves the user time on the front end by doing most of the planning for you, and it provides more time on the back end for the actual analysis. And this is done through a streamlined, user-friendly process. The module is broken down into 4 different segments that you see here: investments, existing assets, intangibles, and analysis. So I'm quickly just going to run through each of these different segments just to highlight some of the features. So under investments, you can add new investments or new assets, so to speak. These either can be from projects or standalone assets. You can also utilize a variety of different depreciation methods. And you can also plan for cash outflows as well as funding inflows, which is of course a crucial step in terms of managing your liquidity. Another thing you can do is actually compare lease versus buy scenarios, and that's something that I'm going to highlight in my presentation. And finally, we have driver-based asset-related expense planning, which is primarily just insurance, maintenance, and repairs, but I'll go through that in my presentation as well. In existing assets, as the name implies, you can plan for your existing assets, but you can also manage your existing leases. You can also plan for expenses like repairs and insurance, as well as improvements here, which are of course crucial to maintaining a up-to-date record-keeping process. The final thing you can do here is you can also plan when to retire or transfer your assets, and that's another very useful functionality. Next, we have intangibles, which essentially functions as a hybrid between investments and existing assets. So because you can't actually lease an intangible, you have both new and existing intangibles within the same segment. Here you can also look at the assets amortization and plan accordingly. And you can also update it to reflect any impairments that take place, which, like improvements, is crucial to maintaining an up-to-date record. Finally, we have analysis, which, as the name implies, allows you to analyze overall capital expenses, but it also allows you to take a look at the asset summary report, analyze capital expenses across both asset class and entity, and analyze the variance between the planned capital expenses and the actual capital expenses. So before we get into this demonstration, I want to talk a little bit more about the scenario. In this scenario, we have a company called ABC Trucking, which is a trucking company, obviously, and needs to update its out-of-date warehouse. So to do so, it's going to need to bring in some new forklifts. These are either going to be purchased or leased, depending on what makes the most sense. And it also needs a new inventory tracking system. So the first thing you're going to want to do is, of course, log in. And then you're going to want to select the capital tile. And here you can see the 4 segments that we were discussing earlier: investments, existing assets, and so on. So let's navigate to investments for now to add the new forklift and the lease forklift for the sake of our analysis. So you'll find yourself at this initial landing page, which, as you can see, is primarily dashboards. Here we can see the impact on the income statement as well as the cash flow statement. And you can also assess capital expenditures by asset class. Another thing I'd like to highlight is the fact that you can change the type of any of these graphs by simply selecting the settings in the upper right corner. And you can change any of these histograms, bar charts, or line graphs to become a pie chart, and so on and so forth. So next, let's actually go ahead and add that new forklift by selecting the second tab on the left, or the new asset planning tab. And as you can see, we have no valid intersections within this current POV or point of view. Let's go ahead and change that. To do so, we're going to want to select one of the drop-down menus, either below asset class or project, or select one of the blue headers. For now, we're going to leave most of the POV the same because most of it applies, and we'll consider the forklift to be a vehicle, so we won't actually go ahead and change that. But we will change projects on the other hand and change it to no project, as well as we'll consider the warehouse to be intended for general purposes and not specific to any particular project. I also want to point out that both these drop-downs function as smart lists, so you can always go back and add members as you need. Finally, we'll push the arrow button to push the changes through, or the go button. And as we can see, the intersections populate and the dashboards update. And so we find Volvo trucks and small vans already exist in the rows here. So let's go ahead and add that new forklift. So to do so, we'll select the Actions drop-down menu from the top right. And then we'll simply select Add New Asset. You should see a pop-up screen that looks something like this. So I'm actually going to skip ahead and fill this out. But I do want to go through the various properties that it includes. So starting from the top left, we have description, where I've input forklift. That's pretty straightforward. Next, we'll skip over asset ID and asset capital asset requisition number, because we don't actually have a system in place. But if you do, these can be pretty useful for your purposes. We also have priority, which essentially functions as a qualitative label. So here you can either select high, medium, or low. And essentially, you're just identifying what's the priority of this purchase. Next, you have justification, which is also pretty self-explanatory. And here you can simply add the reasoning or explain the necessity of this purchase. So I'll leave that alone for now. Asset units is where you determine how many of that particular asset you need to purchase. So let's say we need 5 forklifts. And then asset rate is the cost per unit. So I've set that to $25,000. And then for the salvage value, I've set that to $12,000. Next, we have the capacity UOM, or units of measurement. So you can select hours, square feet, or units, as you can see. And this is also tied to the asset capacity on the right for depreciation based on capacity utilization. But for now, we'll leave those alone since we're not going to be depreciating using that method. We also have the purchase date, which I've set to the 1st of December 2016. So let's assume we actually bought these a month before the start of the new year, and then we actually only put them in service on the 1st of January 2017. You don't have to do this, but I've simply done it to highlight the fact that you can utilize the in-service date in such a manner. Next, we have the FOG, or fuel, oil, and gas costs per year. So assuming that each of these forklifts requires $1,000 in fuel a year, I've set it to $5,000. Next, we have insurance, maintenance, and repairs. And as you can see, I've set those all to 1%. And these are really the driver-based expense planning that we were discussing earlier, and I'll highlight a little bit more. I'll discuss this a little bit further and highlight a little bit more later on. And then we have the location, or the physical location, and we'll leave that alone as location 1, but for the sake of a multinational, for example, with various different locations, this can be extremely useful, as without properly tracking your assets, they can actually be misplaced and lost. And then for the asset name, I've kept it pretty simple, and I've only input new forklifts. That's pretty straightforward. And once we're done, we can just hit launch. And as you can see, we received this notification that the asset was added successfully. And we can also find the asset in the rows right there. And if we take a look at the properties in the columns, we'll notice that generally they're pretty much the same ones that we saw earlier, with the addition of a few new properties. So these would be freight, additional charges, and OCX tax amount. And then if we scroll further to the right, we have the purchase reason code, where once again, if you have a system in place, that can be pretty useful. But I do want to highlight that you can update these properties through this particular screen. So let's assume that we've incurred $1,000 in freight charges on our forklift and getting them shipped over to our current location. And I've actually gone ahead and input that. So as you can see, we have 1,000 under freight, but you might have noticed the cell is actually yellow. This means that it hasn't been saved quite yet. So to save it, we just need to go up to the top right corner and hit the floppy disk icon, as you can see here. And then we'll receive a notification that the save was successful. We can confirm that because the cell is turned back to the color white, meaning it has been saved. So the next thing I want to do is discuss the useful life in years along with some other assumptions. And to do that, we'll go to the final tab on the left, or the Assumptions tab. So the first thing I'd like to highlight here is that you're selecting your you're making these assumptions both based on the asset class as well as the entity, and that's pretty useful if you're a multinational corporation, for example, that's operating in various regulatory jurisdictions, and maybe these various jurisdictions require you to treat different asset classes in various different manners. So that can be extremely useful, as I mentioned, but if you're not, then just remember that these are actually being selected for each individual entity, so you will have to go through and select them for each of the entities as opposed to just assuming that they go across the board. And here you can see we have 3 different options we can change, starting with useful life in years. So as you can see, vehicles are currently set to 5 years. Next, we have the depreciation method, where, as I mentioned earlier, there are various different methods that we can use to depreciate. So either we can use straight line depreciation, no depreciation at all, sum of years digits, declining balance based on the year or period, and so on and so forth. And then finally, we can select the depreciation convention, which determines essentially when the depreciation begins. So here we can either choose the mid-period, prorated to the actual date, or prorated to the beginning of the period. For now, once again, we'll leave things as they are, but I just want to identify the fact that saving works the same way as you would expect it to by simply selecting the Save button in the top right. The next tab I want to go to is the Funding Assumptions tab, just to identify some of the ways you can alter the financing of your forklifts. So here we can determine when cash outflows begin, and it's possible to stagger this, and I just want to highlight that. As you can see here, you can select before 1 month, before 2 months, so on and so forth. And if you select stagger, you can actually input the number of months you would like to stagger it by in the following column. And then if we take a look at cash flow, we see that it's essentially the same thing, only with the addition of funding percentage, which allows us to determine what percentage is actually being funded. The final horizontal tab is the other expense assumptions. And here you can essentially input costs a little bit more comprehensively for each year. So you can input things like the insurance, maintenance, and taxes at the entity and asset class level, just like we could earlier, for both the depreciation assumptions and funding assumptions. I also would like to point out the fact that for insurance and maintenance, vehicles are set to 2%, whereas we set both those to 1% for our forklifts. And I'll point out why that's important in a second. Let's return to the second tab once again. And many of you may have noticed that there's actually been no change to the dashboards, and that some of the intersections are still blank and haven't actually populated. And this is because we haven't actually calculated our forklifts. So to do that, we'll simply select the Actions drop-down menu once again in the top right corner, and then we'll select Calculate Asset. It's worth noting that this can also be done by right-clicking on the asset and simply selecting Calculate Asset once again. So you'll notice that most of this is already filled out. We just need to fill in the asset detail, and this can either be typed. We can either type this in or select it from the member selection screen. So I'm actually going to utilize the member selection screen just to show you what that looks like. And we'll go through and select it like so. And just be sure to select the check mark to the left and have it turn blue. Otherwise, the selection won't actually go through. And then once we're done, we can simply click OK. And then we can hit Launch. And we'll receive a notification once again that the calculation has run successfully. We'll notice as well that the intersections are now populated, so we can see that new forklifts with basic costs and assets have actually populated, and that the dashboards have actually updated as well. There are also some horizontal tabs here that I'd like to go over, but I do want to skip over new assets from projects as well as capital work in progress, as both those are outside the scope of this presentation as they're more project related. But I do want to go into funding and the asset related expenses, and I'll go through them a little bit more quickly since they're pretty familiar. But the main thing I want to highlight here is that as opposed to making these changes for the entire asset class here, you're making them for the individual asset detail or for the individual asset you've added. So as you can see, we can go ahead and change for new forklifts to cash flow incidents. But at the moment, all three are set. And by that I mean Volvo trucks, small vans, and new forklifts are all set to start 3 months out and are set for 80% funding. The next tab covers asset-related expenses, and this is really where I wanted to highlight the fact that we had the 2% set for the assumptions versus the 1% for our forklift. So as you can see, the assumption essentially sets it for 2% for any asset that hasn't had a particular percentage set for insurance and maintenance. But since we set up the new forklift with 1% across the board, when we're actually creating the asset, you can see that actually overrides the assumption and is set it to 1%. And the final thing I would like to show is the detailed justification tab. And here you can essentially give a more in-depth description and explain the reasoning behind your purchase. But I also want to point out the asset detail drop-down menu, as the asset detail operates much like a member name for the assets that have been added. So now that we set up the forklifts in the case that we actually go ahead and buy the forklift, let's go to the third tab to set up a forklift in the lease scenario. So here we once again see that there's no valid intersections at the moment, but we are in the right POV as we're still in vehicles and no project. So let's go ahead and add the lease forklifts. So it's pretty much the same as what we did when we created the forklifts in the buy scenario, by simply selecting the actions drop-down menu and then add new leased asset. So you'll notice a pretty familiar pop-up screen. Most of the input prompts should be pretty familiar, so I'll skip ahead and fill them out. But I do want to highlight a few of the differences and a few of the properties that are a little bit different here. The first of which is that as opposed to having the purchase date and the service date, we actually have a lease start and duration in years, as we're not purchasing the asset, so that makes sense. So for the lease start, I've set to the 1st of January 2017. And then for the duration in years, I've set that to 5 years just to match up with the useful life, so for the sake of comparison. Next, we can also input lease payments and down payments. So I've set those to 500 and 1,000 respectively. And you can also control the frequency and timing of the payments. And I've left those at monthly and end of period, but you can also play around with those. You're also required to input an implicit interest rate. So I've set that to 1% for the sake of simplicity, but that's something else that can be controlled as well. And then you can also control the ownership or whether or not ownership is transferred. So that ownership at the end of the lease can either be for the leaser or the leasee. And if you do actually transfer ownership, you might want to consider inputting some of the values like the initial value as well as the age at the time of purchase, the salvage value, and the final purchase price. And these are all, of course, critical or pretty important pieces to your analysis depending on what you're trying to do. And then for the asset name, I finally simply input new lease forklift, and that's just for the sake of following a relatively similar nomenclature for the naming. And then now that we're done, we can just hit launch. So once again, you'll notice that most of the properties should be pretty familiar, but with the exception of 2 properties, lease type and PV or present value of lease. So let's go ahead and select the lease type. I do want to highlight the fact that here you can either choose an operating lease or a capitalized lease, and that's a pretty crucial distinction. So we'll select operating lease for now. As you can see, the cell turns yellow, meaning it hasn't been saved. So let's go ahead and save it and then calculate the lease. And we'll do the same way by selecting the Actions drop-down menu. And once we're done, you'll notice the dashboard is populated along with the missing intervals that we had earlier. So now let's hop on over to SmartView to do some analysis. And as you might have noticed, I've actually skipped ahead and compiled the workbook on the front end just to save us some time for this presentation. But I put together a pretty simplistic chart that just identifies the depreciation per month compared to the actual the lease payment per month. And pretty clearly or pretty quickly it becomes pretty clear that the lease option makes much more sense. But of course, it's a very simplistic analysis. I primarily just wanted to highlight the integration with SmartView, but you can of course go back and do a lot more analysis or a lot more in-depth analysis as you play with a lot more of the variables, such as the useful life in years, the salvage value, the ownership, payment size, and so on and so forth. So now let's hop on back over to the application to convert the new lease forklift into an existing lease forklift. So what you want to do is select the respective tab and then hit Convert New to Existing from the Actions drop-down menu. So once again, this can also be done by right-clicking on the asset that you're trying to convert, and this will actually push it over to the existing assets file. But before we do that, we must fill in the reconciled asset detail. And this is a little counterintuitive. It's already filled in, but it won't actually work unless you do so. So once again, you can either write this in or select it from the member selection screen. So I'll use the member selection screen because I do want to highlight one other thing. So you can see I've selected Lease Forklifts 2017. And it's worth noting that this member needs to be created on the front end. Otherwise, you can't actually reconcile the assets. So once we're ready, we hit OK, and then we can hit Launch. And let's confirm that the asset's actually been pushed through to the existing assets tab. So the first screen will land on, once again, is primarily dashboards, as you can tell. And the dashboards are a little bit different, but they're looking at slightly different, looking from a slightly different perspective. Once again, you can change the type of graph you're looking at, and it's pretty much the same idea. So we'll skip over the second tab for now and hop on over to the third tab to identify or to confirm that the asset's actually been pushed through. But we will go back to the second tab just to show or highlight some of the different functionalities that we can find there. So in the existing leased assets tab, we see that Lease Forklifts 2017 appears with pretty much or actually identical properties to the asset that we just had. So we can confirm that that's been actually pushed over successfully. And we notice that this generally operates about the same as the lease tab and investments. So scrolling to the right, we find that more properties are still the same as what we saw earlier. And you can also still make any of the edits that we could make earlier here as well. So the next thing you should do is make sure to get in the habit of actually always running the calculate. So let's hit calculate all. And this is just to make sure that all the changes are actually getting pushed through and these new lease forklifts are actually impacting our dashboards. And then once we're done with that, we can just go to the second tab, and I want to highlight those differences I was talking about earlier. So you'll notice that once again, most of the properties are the same, but some of the differences come with the ability to actually select a delayed start date, as well as put some reasoning behind why you decided to delay the start date. And you can also do the same with the premature retirement date, and once again, you can also include a reasoning behind that. Scrolling to the right, we'll find that we have a lot of different retirement properties or retirement-related properties. So we have retirement date, retirement options, retirement costs, and retirement obligations. But I do want to highlight just one, which is retirement options. So here you can either select to you can select to either sell or write off the asset, which is a pretty crucial distinction, as you know. And then we'll also notice that there's some new options in the Actions drop-down menu. So you can retire the asset using this drop-down menu. And it's not to be confused with the properties that we were just discussing, as here you can actually go through the actual act of retiring the asset as opposed to planning it. You can also transfer the asset, and this is either a one or two man job depending on your security settings. So if you have one manager who has access to both entities, they can simply transfer it from one entity to the other. But if that's not the case and you have two separate managers and you don't want to give that security access over, then you'll have to have one manager transfer the asset into a neutral asset, and the other manager will have to transfer it into their own entity. The next I want to highlight some of the horizontal tabs. I'll skip over funding and asset-related expenses as they're pretty much the same, but I do want to highlight improvements as that's one of the features we were discussing early on. And this is a pretty crucial feature in terms of the record-keeping process. So as you can tell, it looks pretty similar to the first page we were on, and we can select the Actions drop-down menu from the right, and then select Improvement. And once we do so, it'll take us to a slightly different looking screen, and then we're going to have to actually select the Actions drop-down menu once again, and select Improve Asset. And you should see this pop-up window appear, which is very similar to that of a new asset or the creation of a new asset. So that's a little bit confusing, but just keep in mind this is for improvements, so you're not confused. So I'm not going to actually go ahead and add an improvement, as that would make sense since we're adding new assets and that really doesn't fit our presentation. But I just wanted to highlight its availability. And I want to point out that it's, once again, very useful in keeping your financial statements all up to date. The final tab is Assumptions. So once again, we'll skip that since it looks pretty identical to what we saw earlier. And let's actually go ahead and add our new inventory tracking system in our intangibles tile. Once again, we'll notice that here it's primarily dashboards once again, so everything's still pretty similar. The primary difference in this tile is the fact that you have new intangibles in the second tab and existing intangibles in the third tab. And this is once again because you can't really lease an intangible, so it makes more sense to just combine those two. And then once again, you have the assumptions in the final tab. So let's go ahead and look at the second tab and add our new inventory tracking system. So the first thing you'll notice is that we're in the wrong POV for an inventory tracking system, as that doesn't fall under the asset class capitalized interests. So let's select the asset class menu. Now let's select computer software. Then we'll go ahead and push the changes through by hitting the go button. And it seems like we still have nothing in this intersection. So let's actually go ahead and let's go ahead and add the tracking system by selecting the Actions drop-down menu. So we'll go ahead and add new asset once again. So it's pretty similar to what we saw earlier. And right away, it's pretty clear that we have far fewer options than we initially did, but most of these should be pretty familiar. So I'll just highlight some of the new ones that we haven't seen before. And those are, for example, acquisition costs, which I've set to $25,000, and that's just an arbitrary value that I've decided to set, but you can set it to whatever your needs are. And there's also additional charges. I haven't set anything there for now. But what I do want to highlight is the salvage value, which I've set to $250 or 1% of the acquisition cost. And that's just considered to be best practice to make sure that depreciation actually functions properly. And then for the asset names, pretty straightforward. I've set inventory tracking system. So once we're done, we'll just hit launch, and we can see that it's now added as a row. Let's calculate the tracking system's impact on our actual financials by once again selecting the Actions drop-down menu and selecting Calculate Intangible. So you'll notice the screen is pretty much the same as what we saw for the other Calculate actions. So I'll just type it in and go ahead. And you notice that the dashboards have now populated. So let's go ahead to the third tab and just to showcase some of the functionalities that you can find in existing intangibles. So once again, you'll find we have nothing in our current POV, so let's check out a different asset class. So let's go with, for example, patents. And here you find that we have Diablo patents in the rows. And the properties should still seem pretty familiar, should be properties that we've gone over beforehand. But I do want to highlight how we would impair an intangible asset, as it's also important to the record-keeping process. So let's select the Actions drop-down menu. And as you can see, you can once again retire or transfer your asset. So let's actually select Impair for now, or Impair Asset, I should say. And once again, this different pop-up appears, but our pop-up appears. And here you can define the asset class, the asset detail, the impairment date, and so on and so forth. So most importantly, let's highlight the impairment date, which I've set to the 1st of January 2017, just for the sake of simplicity, as well as the fair value, which I've set to $180,000, and that's down from $200,000. Now that's once again just an arbitrary value I've decided on, but you can input whatever value you need, depending on what the fair value actually ends up being. Another cool functionality is the ability to utilize the impair option to either expense, capitalize, or partially capitalize this impairment. And if you choose partially capitalize, you can also set a percentage, which is pretty useful. So for now, let's click Launch since we're done. And we can see that the impairment date and fair value have been added to our rows. I also want to highlight the fact that you can't actually change the useful life in years here. You can only do that in the second tab. But if you want to change it for your existing intangibles, you can go to the Assumptions tab or the final tab on the left. And let's go ahead and go there just because I do want to highlight a few other things as well. So here we'll notice that it looks pretty similar. And since it's an intangible, you have the amortization method, and that is either infinite or finite. So if we're looking at something like computer software licenses, that's probably going to be finite since you buy it for a certain number of years. But if we're looking at something like brand valuation, that's more likely to be infinite as it's more of an ongoing value. So now let's hop on over to the final tile analysis. And as you probably guessed, once again, we have a lot of dashboards, but there's actually a greater number of dashboards in this particular screen, and they cover they cover more aspects than you did earlier. But let's hop on over to the next horizontal tab, which is the capital planning expense summary. And here we can see the breakdown of all the capital planning related expenses. You can also drill down to the lowest level members or the 0 level members and make any edits you'd like to make there. You can also edit the POV like we could earlier by simply selecting one of the blue headers at the top. It's also worth noting that you can also export any of these, export the expenses summary or the asset summary, which we'll show next, as either a spreadsheet, or you can actually open it up in SmartView, and that's very useful if you're more comfortable with that tool, or if that's a tool you're likely to use quite often. And then next, I just want to show what the asset summary looks like, and it's essentially very similar, just more asset-centric. And here you can see the property, plant, and equipment, as well as the accumulated depreciation, and that's something that you can take a little bit more of a look at your own time. So next, let's go to the second vertical tab, which is more focused on financial statements. So here we have 3 horizontal tabs, one for each of the financial statements. And the first one is the balance sheet. So as you can see, you can look at the property, plant, and equipment once again, as well as the accumulated depreciation. But you can also see things like the long-term debt, lease obligations, and the current portion of your lease obligations. Here, once again, you can change the POV as needed, and you can also expand these to go to the 0 level members and make any edits as you see fit. Finally, I want to hop on over to the next tab, which is the cash flow impacts. And here, once again, we see that you can focus, that this is just the same thing, but more focused on the cash flow. So we can see how our decisions have actually impacted our cash flow statements. But essentially, it's pretty similar to what we saw with the balance sheet tab, and it functions in primarily the same way. And then finally, we have the profit and loss impacts, which is focused on the income statement, and once again, operates essentially the same. You can see things like the impact of the insurance, maintenance, and repairs, and so on and so forth. The final tab on the left is actually more project-focused, so we'll leave that out for now. And that's my presentation. Thank you for your time, and thank you for watching. Back to you, Greg.
Thank you, Ali. And thank you all for joining us today for our webinar on capital asset planning in Oracle Enterprise Planning and Budgeting Cloud Service. If you have any questions, please don't hesitate to contact us. Ali's and my contact information are displayed on your screen. Thank you again, and have a great day.